25% gain to get back to break even. The stock picking, well, trying to time trades and pick stocks, the market's bigger than we are. A lot of the movement that we see has happened before we can get into the position. Timing the trades, we talked about that. We don't really know the future. We can't control the gains. We can't control how often we're going to be right. Stop orders are not reliable. They can get violated with market swings. Diversification, it's part of the solution, but without protection in place, you can have many positions. Those of you who trade covered calls, and we'll take a look at this shortly, a covered call position can generate a good monthly return if you're right, but if the stock moves up 15%, you've capped your gains to only 3 or 4%. Maybe that matches your expectations, but if I'm trading 10 covered call positions and 8 of them go up and I get assigned and I make my 3% return, that's great. You know, I take in about 24%. Let's say the 9th position kind of dropped a little bit, so I still had about a 0% loss, but then the 10th position had a bad earnings announcement, and the pre-market or after-market dropped 25%. Where does that leave me? Well, it leaves me being right 80% of the time, almost 90% of the time. 8 or 9 of our trades we might consider successful or break even, but we still came out of the month with a loss. We gained 24% on the 8 successful positions, and we lost 25% on the one that dropped against us. That's not really a reliable way to trade. It doesn't happen all the time, but this is where people get stuck. 1 or 2 losses can wipe out 3 or 4 months of previous gains, especially with the spread trades. Now, what's possible? What's possible is reversing the covered call chart. Now, those of you who trade covered calls, we know the standard profit and loss of a covered call. Just draw it here real quickly. We have a capped gain, and then we have a loss on the downside. We're still risking 96, 97% of our position. Now, what happens if we reverse the covered calls trade, and rather than buying a stock and selling a call to hedge or for a little bit of protection, let's say that we buy shares of stock and at the same time buy that in-the-money, far-out-in-time put option. Now, here's an example with a stock called Sybase. The position was opened at 30.71. The September 09 35 put was open for 5.90. So the total investment, again, is 36.61. But remember, we're guaranteed an exit of $35. So we're risking $1.61 or only 4.4% of our initial capital. So the possibility number 1 is limited risk positions, single-digit risks with an unlimited upside profit potential. That's what we want to see. That's what we're looking for with the radioactive trading initial setup. This is how we open all of our positions. Now, the income methods, what does this add to the game? What does this add to what we're going to do? Well, it's possible to enter other trades off of this married put position, to use the married put position as a springboard to launch other trades. And there are 10 different income methods discussed in the blueprint. Now, we started off this Sybase position with a risk of 161 or 4.4%. We have a guaranteed exit several months out in time of $35. Now wait, what happens if Sybase moves up? Say there's an increase in the stock price. Well, we could easily sell the May, in this case, look to sell the May 35 call for $1.61. Now what does that do to our position? Well, our initial risk was 161. After we wait for the stock to make a move, we can sell the May 35 call for $1.61 in this case, and we've canceled that original at risk. This is possibility number 2, is bulletproof trading, taking our stock with the put option for a limited single-digit risk and then applying the various income methods. Now, selling a call against the RPM, this is called income method number 1. And I'm going to show you a recent example from my personal account where I was able to essentially do this same trade on the stock of silver wheat. Okay? But that's what we want to do. We can take that risk of only 4.4%, make adjustments discussed in the blueprint, the 10 different income methods, to pay for that at-risk amount and have a bulletproof position. We'll still have several months to go. From May to September, we'll have 4 months where we have no risk on our position, still have potentially an unlimited upside profit potential after the call expires, and then be able to do other adjustments as well. Now, before we discuss what is different now, what I would like to know is, after we've gone through this, I just want to ask everyone in the audience, are you happy with your trading over the last 12 months? Think about your track record over the last 12 months, and are you happy with your trading results? All right, so these results are coming in pretty good. Got about 50% of our vote in. I'm going to leave this open for just a little bit longer. All right, I'm going to go ahead and close the poll. I want to thank everyone for getting their votes in. Let me share those results with you. Okay, so we have 14% of our attendees saying yes, they're happy with their trading results over the last 12 months. Well, we want to see that higher, don't we? We want to see more people being happy with their trading results. 57% said no, they're not currently happy with their trading results, and we've got 30% who said mixed emotions. Well, as Kurt always likes to do, I'm going to congratulate everyone who voted in any of the three groups. For those of you who answered yes, what we like to say is that part of the reason why they're happy with their trading results is because they're always doing things like this. They're always coming to what free webinars that are available, or learning new things, learning new investment approaches, sharpening the saw, getting more tools in their toolbox, for example, or more arrows in their quiver. The 50% of you who said no, we want to congratulate you as well. I know personally what it's like to not be happy with my trading results over the last year, but we want to congratulate you because you're in the right place. You're in the right place to learn more and to learn the solutions to some of the problems that have caused you to probably answer no. And the 30% of you who said mixed emotions, want to congratulate you as well. I'm familiar with that. Kurt was familiar with that. He saw his first 2 months, had a great trading record, great returns, but then unfortunately he had a bad trade that wiped out his savings. He had mixed emotions. He saw there was profit available in the market, but then he got wiped out. I've had the same thing where I felt like a couple of times in a 6 to 12 month period trading covered calls and calendar spreads that I had 1 or 2 bad trades that got away from me, and it always felt like I was treading water. I was not getting ahead. Mixed emotions is really code for no. We've seen the potential for some gain in the market, but at the same time, we're not really happy. Okay, so kind of saying mixed emotions is really code for no. But that's okay. I've been there, and I've gone through that as well. I'm going to follow this up with another poll. Let's just think about this for a second. Looking back over your trades over the last 12 months, if you would have kept all your wins from last year but limited your losses to 6% or less, how would you have answered that question? Would have you answered, yes, I'm happy with my trading results? Would you have still said no, but you would have been a little bit closer to yes, or you would have still said no or mixed emotions? So if you kept all of your wins from last year but still were able to limit your losses to 6%, how would you have answered? All right. Okay, I'm going to leave this poll open for about another 10 or 15 seconds. And let's go ahead now and close that poll, and I'll share the results, and then we're going to move on. I made everyone a promise that we're going to focus on the PowerOptions tools. We've got plenty of time to do that. All right, so turning this around, 82% would have said yes, they would have been happy with the results. Now remember the question before. We had 57% of our attendees saying no, they weren't happy with the results, and 30% saying mixed emotions. So really 87% of us were not happy with our trading results over the last 12 months. But if you would have been able to keep your wins and limit your losses, we've almost reversed this. 82% would have said yes, they would have been happy with their results. 12% would have said no, but been closer to yes. Might not still be getting everything they wanted, but they would have been closer than what they were over the last 12 months. So 94% would have been closer to saying yes, they were happy with their trading results. And we have 6% who still said no or mixed emotions, that limiting their risk to only 6% but keeping all of their wins would not have put them in the yes category. Now, maybe those 6% of you that answered no, you still wouldn't have been happy. Maybe you have too much expectations of what the market can give to you. And maybe you're over trading a little bit too much. There's some possible things. But I'll invite anyone, of course, anyone can send me an email or give us a call at the office if you have questions. But those 6% of you that have still said no or mixed emotions, what I would encourage you to do is write into support at Radioactive Trading or call the Power Options office, and I just want to know some background of what your expectations are and what you're looking to do, and how, of course, we can still help you further.